Hello everyone. Hope you guys are seen my earlier video. So in that we have discussed about support resistance and basics of stock market and what is a fundamental analysis. I think you guys could be clear on that. If any doubts are there, do reach me out. Uh, yeah. So don't get confused. So we should need to practice in the market to get the full understanding of the market. Then only we can well versed in the stock market technical analysis and we can start earning on that. So with that, we can start with the next set of topics. So it's like a continuation of earlier session, which is technical analysis. So we can take it as technical analysis session 3. Here mostly we'll discuss about candlestick pattern. So what is the candlestick pattern? So earlier we have discussed about different types of candlestick. One is Ikenashi, one is Japanese candle, and one is Renko. Like that, we have different types of candle, but this candlestick pattern mainly focus on Japanese candle. So what is a candlestick? So candlestick basically represents the price movement. So I've shown the candlestick in the earlier session where we have a body where we will have a wick which is opening, closing, high and low. So that's how candlestick will be. In order to refresh that, let me share my screen. So yeah, this is the candlestick which we have discussed earlier. So it has a open, high, close, low. This is on green candle and this is on the red candle. Even it has the same. So as I mentioned earlier, when opening is lower than the closing, then obviously candle will represent as green. When the open is less than the closing, sorry, when the open is higher than the closing, then obviously will represent the candle as red. So mainly it signifies the price has opened very low and it has moved up and it got closed. So the reverse is for the red candle. So basically in the last class we have discussed about support and resistance. So using this candlestick pattern, we determine the reversal signal. So that's the main advantage of candlestick pattern. So what does mean by reversal? Let's say a stock keep on falling. So at certain point, I have shown which is a support point where it tends to bounce. So we can draw a line which represents the support line. But obviously we are not sure whether it will bounce from that point. So in order to sorry for the disturbance, we'll continue with the session. So let me share my screen. So as I told, like basically this candlestick used to predict the reversal. Like we know support and resistance, that's just a line. So we are not sure whether price will bounce from that. So maybe in the support, whether it will reverse and it start going up. Maybe in the resistance, it will stop going up and it might fall. In order to predict that earlier, we use the candlestick pattern. So these all are some of powerful pattern which are used to predict the price reversal. So without wasting much of our time, let's pitch in there. Okay. So this is the definition. So basically, candlesticks are used to identify the trending patterns. This is the main part of technical analysis, and it's mainly used to find the reversal signals. Yeah, sometimes a powerful signal can be given by just one candle. So first we'll discuss on the hammer candle. So as you guys have heard about hammer, so which is used for which, which is used to break something or for any plumbing work we use that. So the candle looks pretty much similar as you can see in the screen. This is hammer pattern, this is hammer candle. So what does it signify? So let's say prices keep on falling and it has reached a support. So what does it happen? So basically price will go down. From there buyers will start pushing the price. It will be so powerful that it will the price movement will move behind the opening price. So let's say it has opened here and it's about to close here. So buyers has pitched in and they have pushed upper. So open is mentioned here and it got closed higher. So in this case, opening price is higher than the closing price and it has reached the low and the high and close is same. So in this case, this candlestick we can consider as potentially reversal. So I'll show this candle in one of the chart, maybe. So I'll take this Bank Nifty as one of the example. So maybe we can draw the support line. So how we will draw the support line? So basically we can use the rectangle. So we use the rectangle here. So let's say if price jumped 3 times here. So I'll mark the support here. Yeah. So this is basically a weekly chart of Bank Nifty. So which is our index which I've shown earlier, which I've said earlier. So as you can see, price keep jumping from this. So are you guys able to locate the hammer pattern here? See, this is a hammer. So what has happened? Price keep falling from here and it has reached here. So from here, people started pushing it. Let me clear the drawing. See, it has started falling and it came here, and this is the low, and from here people started pushing here. Then what has happened? So from here the price started moving up. So obviously it's a retracement. So what does it signify? So basically it signifies a lot of buyers are active here. And even here, if you see, even we can consider this as a hammer. This is a hammer. So from here a sharp reversal has happened. So basically what we will do as a investor or a trader, what we will do, we will buy the stock here and we'll keep the stop loss here, and we might set the target of this one. So if you can see, it never hit our stop loss. So in the support it came, we bought it and it keeps moving. So see here, it has moved till here. So it has never hit your stop loss for the exit of the trade. It keeps moving. So we can consider this candle as a reversal candle. So basically you need to look for this candle at the support level. So which signifies a potential price reversal. Yeah. Let's move on to the next candlestick pattern, which is inverted hammer. So even this is also like a reversal pattern which is found at a downtrend. So similar to that, price keep coming down and it finds the support. In the support, what has happened? So price has went down, then it started going up. Again, it got closed at a certain point. So it's like uh, low is low is basically here, and high is the wick, and this is the closing. So as I told, this candlestick also found at the support. So basically, this candle is also used for the reversal. So it potentially tells like a downtrend has came and the price came down. From here, the price has moved. Again, the seller has pushed, but they can't push further. So which signifies a buyer strength here. So basically, it signifies a price will start move from here. So basically, a potential uptrend will start here. So we can see this example in the same chart. Let's go to the chart. Sorry, just a minute. Let's go to the same Bank Nifty in the weekly chart. Let me clear all the drawings. Okay, we were discussing, we have drawn the support line here. Similarly, we can use this also as support line. See, price got bounced twice here. So as you can see here, this is a hammer candle. So the color of the candle doesn't matter. It might look green, green or red, but it's a hammer candle. See, from here, price started moving sharply up. So inverted hammer. So as you can see here, when the price was in the downtrend, it has reached here and it has formed the inverted hammer. So after that, what has happened? You could have entered here. You could have entered here with this as the stop loss and this as the target. So see, price started moving from here. So basically, this type of candles can be formed anywhere, but the importance of this candle comes in when it was formed at support actually, because at that point only we have a strength of the buyer. See, you might find this candle anywhere, but at support only it has a powerful reversal signal. You need to plot the support, then in that support you need to find this type of candlestick signal. Once this is found, obviously it signifies a potential reversal. So next candlestick is a hanging man. So this is the exact opposite of the hammer candle what we have discussed. So this candlestick is formed, this candlestick is formed at the resistance level. So basically price is moving up. Once price reached at a certain point, which is the resistance, this candle might get formed there, which signaling us the potential price reversal. So if this candlesticks are formed, so then there is a high chance price might drop down from that level. If that's a resistance level, then we can say like 50 to 60% chance like price might get reversed there. So let's see this candle, like let's see this candle in a chart. Where do we have a inverted hammer? As you can see, price got rejected multiple times. See, this is a, so you can take this as a hanging man. So basically this candle has formed here. What has happened to this price? So it's formed at the resistance level. So even this candle potentially signifies a reversal. Like from the price started, see we can say it's a consolidation. After that, the price started falling. Shooting star. So even this looks pretty much similar to the inverted hammer, but it will be formed at a resistance. So which signifies the reversal. So what does it mean? Like there is price is going in the uptrend and it finds a resistance and sellers are pushing the price. So basically a green candle is formed, then the price get dropped drastically and it forms a red candle. So let's see in the chart whether we can identify the shooting star. This candlestick pattern is quite significant, or you can find it many times at the resistance. Where is that guy? Yeah, here. So basically, this is a resistance level. As you can see, there is a shooting star formed here. So once this shooting star is formed, the price get dropped. Or maybe we can see a perfect resistance, because I'm just looking into the, what to say, I'm just looking into the weekly chart. So that's the reason you are getting a candle like this. Let's see. Let's see a shooting star somewhere else. Yes, I think I got it here. So this is a resistance. So basically, this is a resistance. What has happened? Price broke the resistance, but it can't sustain. It started falling and it was trying to retest. So during retest, a shooting star has been formed. So see what has happened. Oof, there is a drop in the price. See, from here, price has fallen like this. I think it's a COVID fall, I guess. So COVID coronavirus fall. See, from here, it has fallen like anything. It has fallen 50% from here. So that's the power of this candlestick pattern. Next, we have a doji. So basically, this candlestick pattern does not signify any reversal. But what does it mean? So basically, let's say price is moving up. So in the uptrend, so price should create a lot of green candle and red candle where it will be moving up. When the doji is formed, what does it signifies? So basically, there is the indecision in the market. Like what to say, either buyers or sellers both are dominating. In that case, price has opened at certain level, it went up, then it went down, again it got closed at the opening price. So which represents a pause in the market. So even this will get created. This doji will get created either in the support or resistance. So let's say if a price is at a uptrend, so during uptrend, this if the doji is formed, you need to wait for the next candle. So basically, after this candle, if a red candle is formed and if it breaks its low, then obviously it's a signal of reversal. So this candle is sort of a pause candle. So even this candle can be formed anywhere, but it has a significance either at support or resistance. So we can see in the chart, doji, where exactly we are able to find the doji. You can see here. So this is the doji, or maybe this is the doji. So what has happened? Price has fallen and the doji is formed. So basically, it's falling. So during falling, another red candle should form here. But what has happened? So it has given a doji candle. So doji candle has formed. After that, a green candle is formed. So what you can do? So once this green candle is formed, you directly buy this share and you place this as the stop loss, and maybe you can keep this as a target. So doji candle is like a pause in the market, which potentially says there is a halt or exertion in the selling or buying. So if this is formed, we just need to wait for the next candle. So this all are some of the candlestick patterns. So even the same doji, you can find it at resistance as well. Mm, there it is. Yeah, this all are the doji candles. See, this doji has formed, price is moving up, this doji is formed, then it came down. Same here. Price is moving up. This doji is formed. Then price came down. Where else I can find the doji? Yeah, even this can be considered as a, yeah, it's a doji actually. So price has started falling. Then there is a pause in the market. Then once this doji is, the doji low is broken, see here, there is a drastic fall. Market keeps falling like anything. Okay, so spinning top. So even this is also pretty much similar to the doji, and even this does not signify any reversal. So basically, this is similar to the doji where the body size is somewhat high. So even it's the same like what has happened in the doji, it just signifies a pause in the market where buyers and sellers both are dominating, where it's unable to decide its direction. So similarly, you mark the high and low. Once the high is broken, it goes up. Once the low is broken, it will go down. So even the color doesn't matter. So if it's a red, then obviously a red or green, it literally signifies a pause in the market. See, this is one doji. See, this is doji. Once the high is broken, the price started moving up. See, this is shooting star. Price started falling down. As you can see, a lot of indecision candles are formed here. Doji, doji, here, shooting star. Yeah, this is classical doji candle where body is exactly same as open, high and low. So this type of candles you can find everywhere. So we are discussing about spinning tops. See, this is basically a spinning top. Two spinning top candles are formed. Once this high is broken, price shooted up. And where exactly it has formed? So it's formed. So price started moving up. It gave the pullback. So basically, this is the support area. Let me use the rectangle rather than this tool. See, it's basically a support. So in the support, this two inverted hammers are formed, or maybe this doji. This doji is formed and the inverted hammers are formed. Then price started moving up. Then again here a small level of support is created since price jumped from here. Once it came, it has created a spinning top here. So once this high has broken, the price started moving up. Pure sync candle. So basically, this is a two candlestick pattern. This signifies a potential reversal. So basically, what has happened? The price is going down and it has reached here. So maybe this, even this will get formed at the support only. So whatever candlestick pattern what we are discussing, everything will be formed during support and resistance. It has its own significance once it's formed at a support or resistance. It can be formed anywhere, but obviously this reversal or maybe this candlestick pattern comes into picture once it gets formed either in the support or resistance. So that's where you need to look for. So even this piercing pattern, what happened? So price keep falling and it founds the support. So at the support, what has happened? So the next candle, which is the green candle, which is closed 50% above of the red candle. So basically this signifies a potential reversal signal. Or if you are confused with this candlestick pattern, what you can do, you can combine this both the candlestick pattern. So it's a red candle. So you can say minus green candle, which is a plus. So we have a body which is like a minus, small minus. So when you combine this red and green gets subtracted, you will be left with, so you will be left with only this body and one long big, because this body gets subtracted. So you can say like this. So whether you guys able to relate what type of candlestick pattern it is? It, it is actually a inverted hammer candle, which we have discussed earlier. This one. So basically this candle only they have splitted like that. Not splitted, two candles we are considering, and it was shown as a different candlestick pattern. So same significance. This candle they have splitted and they have given like this. So potentially once the body is getting close 50%, it potentially describes a reversal. Let's go and check in the chart. Where is that guy? Let's check in the day time frame. It's really hard to find that type of candlestick pattern. Piercing candle. Where are you? Okay, let me check in some other stock. Let's go to our discussion stock, which is Tata Motors. Tata Motors. Yep. Do we have a piercing candle? Yes, we have it. So this is exactly the support, and we we have a piercing candle here. See the green candle which got closed 50% above. See what has happened. Price has started moving up. So basically, if you would have identified this pattern at 400, now you will be sitting at a profit of 200 rupees. So it's very large risk reward where you buy at this candle and you put the stop loss here, and you keep, maybe you can keep the target open because you are using long-term holdings. So you have a risk reward of, you have taken the risk of 7 rupees and you would have got the profit of 200 rupees. See, that's the power of this candlestick patterns. Why I marked the support line here? See, price has, we have a very big green candle, then it came here, again it pushed up. So obviously price has jumped twice. So obviously next time there is a high chance price will jump here. Basically the buyers are active here and they are trying to push the price up. So whenever it comes again, it will again try to push up the price. So bullish engulfing candle. So what is the engulfing candle? So basically Even this is a reversal pattern. So whatever candlestick pattern which I am discussing now, so the exact opposite of that will happen in the resistance. Instead of red candle, you need to instead of red candle, you need to replace with the green candle. So just you need to swap it. Anyway, we are covering it as part of the this PPT. So next is the bullish engulfing candle. Even this is a two candlestick pattern. So even this signifies a potential price reversal. So during downtrend, once it finds the support, there will be a big green candle which hides this red candle. So basically it engulfs the red candle, so which potentially implies there is a high buyers are active and they are pushing the price like anything. It has engulfed the previous candle. So even this is also pretty much similar to the candle which I have discussed. When you combine this, it looks like a same inverted hammer, but here the color will be green because this red and this green will get multiplied, sorry, will get subtracted, and you will have a green very long big inverted hammer will be here. So that's how I look at it. Maybe if you guys are comfortable, you can look at a two candlestick, or maybe you can have a single candlestick. So that's up to you guys to decide. So let's check in the chart. Engulfing candle. Okay, we can take this candle as the one example. So where price is coming down and it has reached the support and it has formed the red candle. So what has happened? Then from here, one big green candle which engulfs this one. So after that, price started shooting up. So even this candle are found at the support level. So next is the three candlestick pattern. Even this is also used to find the reversal. So this candle also, this type of candlestick also formed at the support level, where a red candle will come, sorry, bearish trend will come, then there will be indecision candle will form, then there will be engulfing candle will get formed. So by using this, we find the potential reversal. We call it as a morning star, which is three candlestick pattern. So let's see in the chart, morning star. So basically, you can't find the exact diagram which I have shown. The candlestick might have a wick either up or down. It's potentially you can consider it as a that candlestick, and you can consider it as a potential reversal. See, the red candle is there, then the two green candles are formed, then this green is formed. Suppose that price started moving up. Where it has formed? It has formed at the support level. Or we can look for a exact thing where we have a morning star. Let's check in the daytime frame. Okay, I can't find here. Let me search in some other stock. Kotak. Let's see the Kotak stock. Morning star, morning star. Yeah, this also we can consider as a morning star basically. See, it's like it has four candlestick, but still the same thing has happened. Downtrend, then the set of doji, then the green candle, then price started shooting up. Let's see anywhere I can find the morning star. Got it. Price started falling, then we have a morning star, then price started shooting up. So this is a morning star. Red candle, then indecision candle, then the green candle. So as I told it will not be exactly the same, but it looks pretty much similar. So you just need to look on the candlestick in uh, in a proper way. So that comes by a practice actually. You need to start reading the chart. 3 white soldier. Even this is a bullish reversal candlestick pattern. This is also a 3 candlestick pattern. So which potentially formed at a support level only, or it can be formed anywhere, but it has a significant importance once it gets formed at the support level, where the downtrend stops and the uptrend starts continuing. So it will be like 3 strong green candles will get formed. So let's see at the chart. So here, uh, let's go for the Nifty monthly time frame because I have just seen it recently. If you can see, this is the support. At the support, the indecision candle is formed. You can take it as a morning star, then 1, 2, 3. So 3 white soldiers. So once this is formed, so obviously the stock should go up. So if you are seeing this video, so this is on the Nifty monthly time frame. You can very well go and invest on the Nifty. So there is a high chance it has given the monthly signal like 3, 4 white soldiers are formed. So there is a high chance this stock, sorry, this Nifty will go up. So this is a single candlestick pattern, which is a Marubosi candle. You can say Marubosu candle, or maybe a big green candle, which does not have a big. So basically, what does it represents? Is opening price is less than the closing price, and opening remains as the low, and closing price remains as the high. So during downtrend and the support, if this candle is formed, then obviously it represents a potential reversal. Let's check in the same chart if we have any Marubosi candle. Yep. See, price is falling because why I've marked it as a support. Basically, we have a strong momentum here. Once price reached here at the support, we have a very big engulfing candle. Suppose that, see what has happened. Price started moving up. So if you would have bought here, so so if you don't mark the support, it might seems like it has formed at some random place, but that's not the case. It has formed at the support level because we have a strong momentum here. Then price came here, and it there is a high chance it will jump from here. So there is it has given the signal as well, Marabou's candle, so that the price started moving up. Three inside hub. So even this is also a reversal candlestick pattern where the green candle is formed, then red candle is formed, then subsequently two green candles are formed. So these two green candles are like a Marabou's candle, where which does not have a big. So this type of candlesticks are somewhat rare to be found. So similarly, if you combine this, it might look like an inverted hammer. So even this can be found at the support level only. It's very hard to find this candlestick here. Maybe I'll post in the next video if I can able to locate this candlestick pattern. So we can close this session. We can see the rest of the candlestick pattern in the next set of video. Thank you. Bye.